globally, the Indian peers are not very far behind. They're also having a great run. InfoEdge, that's the stock we're talking about today, that in fact has run up nearly 200% in the last 1 year alone. That's the year-to-date chart, up nearly, in the year-to-date, up nearly 181%. That's the story of InfoEdge. To discuss that stock and the story going forward, I'm being joined by Hitesh Oberoi, the MD and CEO of InfoEdge. Hitesh, thanks for joining us. Let me start off by focusing on how the industry has been panning out. We've seen skyrocketing valuations for internet companies of late. What are your comments on valuations? Do you think this is sustainable for the long run?
Well, the truth is that, e-commerce in India is only beginning to happen right now. Alibaba, I think, is about to go public, and people expect Alibaba to have a valuation of over 200 billion, and they're looking to raise 20 billion. So clearly the opportunity in e-commerce is huge. India is also a large market, maybe not as large as China, but hopefully it'll get there in about 10 or 12 years. There are already about 200 million plus people on the internet, and one expects this number to also grow substantially over a period of time. So clearly e-commerce in India is going to be big. The truth is that less than maybe 2 or 3% of all sort of purchases happen online today, and this number over a period of time has to move to 10, 20, 30%. And therefore, as a result of this, several companies will get built in the e-commerce space. Now, whether these companies should be valued at 1 billion today or 2 billion or 5 billion, that's frankly very, very hard to say. And which company will succeed in this space is also very hard to say. But the truth, but the fact is that, e-commerce is a big space, and, lots of businesses will get built. A lot of spending will happen online. Millions of customers, millions of Indians are going to transact online. They're going to buy a lot of stuff online. And therefore, there's a huge opportunity. And that's why you see this interest in e-commerce from investors and entrepreneurs alike.
Speaking of industry, Hitesh, Goldman Sachs in its latest report has said that with the change in government and revival in the economy, internet companies like yourself will benefit. Your comments on that?
The businesses we are in, both Naukri and 99acres, are pretty cyclical in nature. So once when the economy is down, they go down, and when the economy picks up, we have a hockey stick effect on our businesses. So, if the economy picks up going forward, and we've been saying this for a while, if GDP growth moves up to 5, 6, 7% per annum, that will have a tremendous impact on both the Naukri business and the 99acres business. Once hiring picks up, what we saw in the last slowdown was that, when we had a good year in 2010-11, Naukri actually, after a slowdown, started growing at 30-40% once again. Now, I'm not saying we'll hit 30-40% anytime soon, but if the economy starts to recover fast, then Naukri could start growing very, very fast as well. Similarly for 99acres, the real estate market right now is in the doldrums. Interest rates are high, prices are high. There's a lot of unsold inventory in almost every market. Once sort of inflation stabilizes and interest rates start to fall, we expect an uptake in real estate activity as well. And if that happens, it'll have a very, very positive impact on the 99acres business too.
Hitesh, your stock has been rallying at a time when you're seeing companies like an Amazon say that they're going to get more aggressive on the Indian market. I want your comments as far as this competitive landscape goes. How do you expect that will pan out going forward?
Competition is actually a function of what people expect to happen in the marketplace going forward. The truth is that in the digital market and the digital economy is here to stay for good. Already, I think people spend, at least the youngsters, people who are less than 30 years old, they spend more time on the internet than they spend on, let's say, television or reading newspapers. And ultimately, where consumers are is where the marketing dollars are going to go. And where, suppliers and sellers have to reach them. So the fact of the matter is that with the phone economy picking up, with internet penetration increasing, with smartphones becoming cheaper, people are spending more and more time on the internet. Not only are they spending more and more time, the internet is actually reaching more and more people. So chances are that in 3 years from now, we'll have maybe 400 million people on the internet spending maybe 2 hours a day on the internet. Now, if that has to happen, then marketeers and sellers of goods and services have to reach people where they are. And therefore, you will see a lot of interest in the internet, not just from pure internet players. And, Amazon and Flipkart and people like us are pure internet players, but even the offline players, people who actually do business in the offline world, whether it's a Domino's Pizza or whether it's a Bata store or whether it's anybody else for that matter, they will all move online. And there will be even more competition than what you see today. Because right now what you're seeing is competition from just the online players, but you will soon have the offline players entering the field as well. And,
Okay.
and not just, people will not just be competing for customers, they will also be competing for talent, because talent is going to be scarce in this new economy. And so I think this is just the beginning. The truth is that over the next 5, 10, maybe 20 years, the internet is going to be a growth sort of business. And everybody who wants to survive and do business in this world will have to have an internet strategy. And that will just mean more and more competition in the online space.
So you're saying everyone needs to have an internet strategy, Hitesh. You also need to have a mobile strategy. Run us through how much you're earning right now from that space, and how is that really going to change going forward?
We started working on the mobile piece about a year and a half ago, and we made tremendous progress since then. On Naukri, for example, about a third of our traffic is on the phone. And in the Jeevansathi business, about half our traffic is already on the phone. And this traffic is increasing every month as we speak. I don't know what it will stabilize at in the long run, but I won't be surprised, if in certain categories the mobile phone is ultimately 2/3 of our traffic. And even in categories like Naukri, as we get better and better with our applications and with our product on the mobile is at least half our traffic. So mobile, is a huge opportunity for everybody. Not only are we seeing people who access, the internet on the desktop also access the internet on the mobile, we're also getting first-time users on the mobile who access the internet only through their phones. They don't have access to the desktop actually. And this is actually how the internet will really spread in tier 2 and tier 3 towns. The truth is that, you can buy a phone for 5,000-6,000 rupees and get onto the internet very, very easily. And while it, still costs about 30,000 rupees to buy a desktop. So the internet, the mobile economy is here to stay. We are investing aggressively in it. Almost about a third of our business is already on the phone, and this will only increase with time.
All right, quick last word before I let you go. What's the year ahead looking like? Any new geographical areas or segments that we'll see you enter over the next 1 year?
So, as an operating company, InfoEdge is, I think, still going to focus on the segments it's already present in, which is basically jobs, real estate, education, and matrimony. These are the 4 things we want to do inside the company. It's unlikely that we'll start a new business inside the company in the next 12 months. Of course, we are not ruling out acquisitions or entering neighboring verticals. So we could acquire another job site which is trying to do things differently. We could acquire a real estate player or a boutique shop, which is trying to do things differently. But in the categories we're already present. Outside, we've invested in 9 companies. We haven't made too many investments in the last 1 or 2 years because the companies we've already invested in. We've been sort of investing in the second round, investing in the third round in some of these companies. But our investments are mostly opportunity driven. It's not as if we have a target to invest in companies, but if we meet a good team, if we see a good business plan, if we see an interesting category which we think could grow big, we could invest in those companies. So there's no such plan as such, but we keep meeting companies from time to time, like I said, to both either acquire for our internal businesses or to invest in. But there's no hard and fast rule that we have to make 2 or 3 investments or we have to be in this category or that category.